one of my favorite setups is one that I created for myself, and that is the 1, 2, 3 reversal strategy. First, it works best with large and mid caps, but will work with any high volume stock. If there is less volume, it can just mess up some of the indicators that we use, giving more false oversold or overbought signals. Number 2, this is more of a day trade, but really it depends on which time frames you choose. The 1, 2, 3 stands for 3 different time frames. My favorite sets of time frames to use are the 1 minute, the 2 minute, and the 3 minute, which will be more of a scalp trade. My other favorite one is the 3, 5, and 10 minute, which will be more of a day trade. The 1, 2, 3 typically works best during the first hour of the market, and the 3, 5, 10 works best after the first hour of the market open. However, you can use any 3 time frames you really want and adjust the length of the trade. Number 3, this is a reversal strategy. Number 4, our edge is using the RSI or the ready aim fire indicator, or even both. We are looking for an extreme move up or down that can't be sustained, and it needs to be going into a significant support or resistance area. Number 5, you find your profit using Fibonacci retracements or your stop at low of day or high of day. Number 6, this can be used with stocks, options, or futures. I have found futures will work best during stock market trading hours, again just because the price action needs to be sustained with volume. Otherwise, the indicators get all messed up. And for the same reason, I would recommend turning off your extended hours on your charts, but sometimes it is okay if there's enough volume. Number 7, there are a few ways to find these trades. One is using my ATR scanner with trade ideas, or my ATR watch list on Thinkorswim, or you can just use some scanners that have large volume movers, or of course the Ready Aim Fire specific scanner on Thinkorswim. Links to all of these different scanners are below. Now the first step to this strategy is finding a stock that is falling or rising way too fast. We're looking for the RSI or the Ready Aim Fire to go into overbought or oversold on all 3 time frames. Second, we need to find a good support or resistance level. This can be done by looking at price action, daily moving averages, using Fibonacci retracement or symmetry. The better the support or resistance area, the more conviction that can be added to the trade. Let's go over some examples. First, we have Baidu here. So I've got a 1 minute chart here, 2 minute, and a 3 minute chart. And then I have the Ready Aim Fire down here with the parameters being 2 as overbought and -2 as oversold. Then I just have the standard RSI down here. Now, the first thing to look for is, well, we're looking for oversold move or overbought. In this case, oversold. So we break this low of day here. And when we broke that, we were oversold on the 1 minute. So it is possible that you could have taken this trade as a bounce off of that just on the 1 minute. But that's why it's important to have multiple time frames. Let's look at the 2 minute. On the 2 minute, we weren't quite oversold until it started to drop here. That's where we became more oversold and into a better area. Now, prime is if the oversold is all the way to like 4. -4 is really oversold, which can happen. And these didn't ever get that far, but it still had the setup. The 3 came oversold right here at the low. Now you have to remember this is a 1, 2, 3, so this is a scalp trade. We're not looking to hold this all the way back up to high of day. Now that we have all of them oversold, and you probably would start to be looking for support when the 1 minute and possibly the 2 minute was oversold. First thing you could see is yesterday's close right here is a decent level, 186.10. Possibly right here Anywhere in this little area, just between this price action here from the previous day, could be a decent bounce. Something else you could do is on a 1 minute chart, just using Fibonacci, just from there to there, which is really small, but it does point out that level of 186.30. So there are a lot of different ways to find this level. Like I said, we're not looking to take it all the way back up to the top, but this is somewhat what the setup will look like. What I really want to show you is one that is a very bad example. This did not have any kind of bounce really. And if we look at the 1 minute, we did go oversold right here, but if we look at the 2 and the 3 minute at that time, they're not even close to oversold. So that is no trade. Now, if we keep going, we get oversold again somewhere right here, which we are on the 2 minute, but we're not on the 3 minute at this point. So this is still a no-go. And then for the rest of the day, the 1 minute doesn't really ever go all the way oversold. Something that's telling you that this is not an emotional move. This is just a thoughtful grind down. Now, something I want to show you though is let's look at a 5 minute chart on this stock. Look at that. It was oversold this entire time right here. And that's the biggest problem with this. If you're trying to reverse this and it's just grinding down, it's not going to work. Now, let's look at a 10 minute. Look how oversold this got right here. It did pop a little bit off that move right there. We're still having a divergence here, with this going up and the stock still going down. So that is a red flag that the stock is weaker, and now this setup isn't even valid and the stock hasn't even made a move up. So do keep that in mind that can happen. Now let's look at a good example. So this is a 3 minute, a 5 minute, and a 10 minute. So we're overbought right here on the 3 minute, right here on the 5 minute, and right here on the 10 minute. All that points to basically the top of the day on this stock. Now, if we were trying to find resistance here, something we would maybe do is take symmetry, maybe take this move from like here to here and measure it to here, giving us that move, which probably the same as here to there. Pretty close right there. And then we could do a Fibonacci extension here to here, giving us that red line. So look at all of that resistance right there on the 3 minute chart. So that is pointing out our level. We've got a significant level that we've found. We are oversold here and it starts to work in our favor. So at this point, it should make a lower high right here with the 5 minute going in our favor, and it does. And then the 10 minute going in our favor, which takes us all the way down to this support level. So this was a picture perfect trade here with the 3 minute, the 5 minute, and the 10 minute, all working out in our favor. If you're using a 3 minute, 5 minute, 10 minute, around this time, like midday, tends to work really well. Be careful doing this later in the day. Really, it's that simple. Just 2 major steps. A stock that's making a huge move, 3 time frames oversold or overbought, going into a significant level. All right, now that we have gone over a few examples, there are 4 major warnings with this strategy. First is if the market is having a rough day, don't try to be a hero by doing a reversal and buying the dip with a stock that is clearly following the market. And if you do, then make sure that you are watching the internals. Second, if the stock you are trading is more of a grind, not a big extension, then you will likely get grinded up. Third, don't get fooled by candles. Sometimes candles can look more appealing than they actually are. Look at the size of this candle. It looks huge, but is it? It might not be that big of a move if you're looking at the price rather than the size of the candle. You need it to at least make a big enough move to have some meat on the bone for when you try and reverse it the other direction, especially if your target is only 50% of the previous move. Lastly, practice knowing where to stop out and where to possibly add to your position. That is the toughest part with any reversal strategy. If you add to the position, you likely will have more conviction because it's even more oversold or overbought. Just remember, indicators are just math equations, not a crystal ball. The stock market can stay overbought or oversold way longer than you think that it can. If you do add to your position, you will likely have a very large win rate, but your size could get too large. So it's those losses that you need to be careful of. This strategy is one reason that I created the TCP strategy rating. Make sure that your one loss does not overtake 20 green trades. It's very easy to be caught bag holding with a reversal strategy. Please listen to those warnings and test out this strategy before applying it. The Ready Aim Fire indicator is almost too good to be true, which leads to possibly too much trust in it. Remember, this is a doable strategy with the RSI indicator and maybe even stochastics, but I haven't tested stochastics. But let me know if you have any questions, and I'll see you in the next video.